You read the newspapers, you hear it in the headlines every day about the massive spending that these technology companies are doing, building out infrastructure, building new data centers. And while we're a little bit concerned about some of the cross-holdings, the vendor financings that seem to be happening, there is no doubt there is clearly a boom underway. Welcome to Key Points for November. This month we look at the resilience of the global economy, we turn our attention to the massive spending in the IT arena, and of course we look at the financial markets and ask, can the bull market in equities really continue? Now, turning to our first point, the global macro environment has actually been remarkably good despite all that's been thrown at it in recent months. The United States and China have found some form of trade truce, realizing that they're so dependent on each other, they had to find a pragmatic solution to look after each other's economies. And if you look at the chart I'm showing you here, this is the PMI data. Anything above this dotted line shows that these economies are expanding. And you can see across the globe, things are looking actually quite good, all things considered. And one of the reasons for that is, of course, is that interest rates have been coming down. We mentioned this last month. And the chart I'm showing you here shows you the latest move by the Federal Reserve, cutting interest rates by a further 25 basis points. Now, although the Fed chair has said it's not a given that there's going to be more cuts ahead, we do think there'll be another 25 basis cut in December and perhaps one more again early next year. But the point is that global financial conditions globally are very supportive of that growth dynamic. Now, turning to our second point. You read the newspapers, you hear it in the headlines every day about the massive spending that these technology companies are doing, building out infrastructure, building new data centers. And while we're a little bit concerned about some of the cross-holdings, the vendor financings that seem to be happening, there is no doubt there is clearly a boom underway. And perhaps the best example of that is the chart I'm showing you here. This is looking at the largest US companies really over the last 10 years. And while you can see back in the 2015-2016 area, it was companies like Exxon and Walmart that were really the big players. What is truly remarkable is this blue line. This is NVIDIA. And really over the last 2 or 3 years, you can see there's massive expansion. This is now the world's biggest company. It is worth a staggering $5 trillion US dollars, the biggest company in the world. And of course, this is all this IT build out that we're seeing. Now, we are concerned that this is maybe getting overdone. We've seen in some of the earnings, for example, by Meta, that investors are beginning to question the size and scale of this build out, particularly as a lot of that is now coming through debt financing. We do believe that this has still got further to run in the months ahead. So turning to our third point, we believe the bull market in equities can continue for some time yet. If you look at the chart I'm showing you here, this is the S&P 500, and you can see with the exception of the Liberation Day wobble that we had back in the spring, this market has been in a broad uptrack for a long time. In fact, the track that we're seeing since April is very shallow. It shows you that investors are continuing to buy the dip. This is a momentum move higher, and we think that has got further legs, certainly into the end of the year. Yes, we're concerned about some of the massive investment we're seeing in IT, but when we look at the earnings season that has just happened in the United States, companies continue to post very good numbers, double-digit returns, margins are hovering close to high. So this is not just a case of moving up in hot air. We do believe the fundamentals are still quite decent, allowing the market to move higher. Yes, of course, even in any bull market, there are risks. Yes, we should anticipate some corrections, but broadly speaking, this is a momentum-driven market, and while momentum holds, we think there's further upside ahead. Remember, as always, you can see the full report and all our publications on Zurich.com. And I look forward to seeing you again very soon.